The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Let's check out where the markets are at right now. I'm your host, Darrell Martin, right here on TFNN, and let's see what's going on. We got the S&P is currently down 3.5 points. We got the Russell down 7 points on the day. The NASDAQ's currently up 1.5, and the Dow is down 18 points. Pretty flat day. A lot of little oscillation going on. Got some good moves in some of the currencies that we might be able to look at. And like I said, we might do a little bit of magnet price analysis today as well. All right, so that gets that wrapped up. Let's go ahead and see. On the metals, we got copper is up 0.3. We got gold up about 0.5% right now. We got silver up about 0.5% as well. Natural gas waking on up, down 2%. We got oil down 29 cents on the day. Corn is down 5, and soybeans is up 8. Euro dollar currently up 8.5 points. We got not 8.5 points. Soybeans up 8.5 points. We got euro dollar down 48 ticks. And we got the Aussie dollar up 4. We got the pound dollar down 43. Dollar franc is currently up 25 pips with the dollar CAD up 13. US yen is down 16 pips. Euro yen down 5. And we got the, Aussie yen down 5. Euro yen actually down 65. So moving pretty nice today. We got the pound yen down 78 pips. And looking on over at the euro pound, just down a mere 6 pips on the day. All right, well, we had a little news plan. We'll talk about that, just a quick summary on where we're at on anything, and then we'll dive in. We'll start pulling up some markets, see if we can find some magnet levels. We'll start off with maybe, one or two indices. We'll dive into looking at some of the commodities, and maybe even see if we can knock out a couple FX pairs, and just sort of walking through the process. So today is June 10th, trying to see, really, we didn't have a whole lot there. We had a lot of Be Aware events going on, Be Aware of pound manufacturing production. We had Be Aware of the Aussie dollar consumer sentiment report, and Be Aware of, the RBA government speech yesterday, but not just a whole lot of news events. We got a lot coming up, and I went over that today. If you didn't catch it, okay, you can always hop over. Let me show you where this is at if you're watching right now. You can always hop on over to TFNN, and for the most recent archives, just go to Tiger TV, and you can go down here to Channel 7. That's for the Diagnostic Trading Hour. The Binary Options Hour right there, the Native Binary Options Hour, that's the show that me and Tommy O'Brien do on Friday mornings. But if you click on that channel, then you can see basically the replays. And so you click Load Channel. And once you do that and you load that channel up, then there'll be replays available for you that you can look at for that specific page. And you can basically hop through different ones that are there. And but it's a great way to catch up on some of those most recent archives. And there's a playlist up here at the top. Okay, so there's some features just in case you haven't messed with this before. But it's pretty cool. And you can go right up here to the playlist. You can scroll down, and you can see, think about the last 20 or so sessions are right in there. So April 1st, 2nd, 3rd, going all the way down. It's an easy way to catch up on any of the shows that you miss here on TFNN. So, whether you're looking to, check out Basil's show, or you want to check out Pezzavetto or Tommy, or, if you missed out on one of Steve Rhodes' shows, you want to check out Andy Hecht. So all those shows right there, easy way, just go to their channel, and you can look at it. And like I said, even for the Friday here for the Bull Bear Binary Hour. So I know a lot of times people may forget we have that one, but it's a great show. Me and Tommy, like I said, team up on that one. Me and Steve got on that one this last week, and we put on a butterfly and went in and captured some nice profits, just $100 or so, $150 I think it was, right in what was it, about 30-45 minutes for our viewers there. So it was it's nice to have a show that pays you to watch, right? So of course you got to participate, but then go in here and we were looking at this and I was bringing it up and I was plotting it out. We put the trade on. And market was moving along, and I'm like, I think we're going to need to go ahead and close this trade out and take some profit. So, and let's see here. Looks like we did close it on down, like right there, just at the end. So, but you can watch through. You can sort of see how we walked through that, how we came up with, each trade, each step on that trade, and just a way to, learn, to review, to check out the pieces again. And these are just the replays, but they're very helpful. And a lot of people just don't know that they're there, or they don't know about the playlist that's built in. Okay. Well, that ought to get you up and running on checking that out. You can also go, of course, to TFNN.mobi and listen down on your mobile phone. Doesn't take up really much of any bandwidth right there for you. I mean, of course, you got to make sure you have data, but if you're on Wi-Fi or, whatever. But, some people do that even while they're at home or, trading or whatever. So they're trying to save some of that screen space or bandwidth. That's one of the ways that you can do it. And, of course, if you're out and about, you can just, like I said, go to TFNN there on your mobile phone and listen in as well to any of the traders throughout the day. All right, so we know that we don't really have a whole lot of news right now. We do have a couple news reports. I just want to remind you of what's coming up. We're going to have the pound employment rate coming out tomorrow, and you can enter no later than 3, okay? But you actually can enter as early as 11, okay? So as early as 11 p.m., you can get in on that trade. And so I want to make sure that is clear, okay? But enter early as 11. And these are just how I sort of log my trades in here. And at $40 or less risk. Okay, so 11 p.m., early as 3 a.m. Or no later. Let's see, early as 11 p.m. There we go. Early as 11 p.m., no later than 3 a.m. And so, cross that one off. So $40 trade right there, going for the 7 a.m. Expiration to do a straddle. Or maybe even a strangle, your choice, right there on the pound dollar. We got the weekly inventory report. It's going to be coming up tomorrow. So I look at usually 30 and 90-minute expected ranges to see sort of where we're at on that. We got an ag report tomorrow. It's going to be right before the show. So let me double-check that. I'm going to pull it on up. So this is just my list I use to sort of keep all my stuff together. But... all right, yep, 12 noon Eastern time, so right before the show. Anyways, those are usually big reports, okay? And I like to trade them quite a bit, so definitely, if you're trading ags, you better be aware of that report, because, I mean, it can be limit move days, okay? Meaning like 40-point moves on corn. It may just be a 5-point move. You don't know. But it's one of those days that if there's going to be a limit move day, it happens often on those days. So be aware, 12 to 1. We're going to have the high-impact reports coming on out. It's not going to be the annual one, but it's still going to be the crop production report and all that coming out. So, again, massive impact usually, 12 to 1. Potential straddle or strangle. There's not a lot of stats on it. You're just going to have to go back. You have to do either your own homework or just play the thing and just look at the deviation levels, look at the cost, look at how far it has to move. But definitely a trade worth you spending some time on. There's not just an incredible amount of liquidity on the ags. Let me pull that up and show you. Let's see here. I'll go in. It's unfortunate because I wish there was a whole lot more. I'll take the book out 10 times over. It's one of the few things I'll actually go in and do that on. Just because I'm usually pretty confident that when it's moving that it's really going to move. But I'll open that up. And let me get in over here. So what I'm doing right now is I'm logging into the scanner. Okay. And then just log into my Nadex account real quick again. Make sure I got that all set up. You can choose demo or live, so you can practice with this with a demo or live account. Okay? And with that, I can go right over here and bring up, let's say, corn and soybeans. And then if I go and I click on contract there, you can see there's not obviously a lot of depth. Like you're talking about 5 contracts. It's really low. Why is that? Well, 1, corn is a less liquid instrument, period. Okay? 2, they have to have an option market maker that's making options on corn, which is, again, not the most liquid of all markets out there to trade on. To sort of show you what I mean, let me bring up the CME site right over here. And we'll go in and we'll look at, like I said, say corn or whatever. And so we'll go to products. We're going to go over here to ags. The thing will stick. This site is messing up. Stop it. All right, ags. And then we'll go down here. They're having carnivals now or something. I have no idea what's going on with that. We'll go over here to corn. And then with this, we can see, okay, 79,000 contracts in a day. Next couple months, 57, 59,000. Not too bad, but not exactly high volume trading for a future contract. Open outcry can, obviously is a lot less. Let's see if they're even putting the volume up anymore. They're not even listing it. And okay, so let's check out the Globex options. The options. There were not 79,000 contracts on the options. Let's see if they're actually... There we go. Okay, calls, puts, volume. All right, so for just looking at July contracts, it looks like maybe a few thousand contracts in total volume for the day. Okay, thus far. We can go back and we can look at, some future months, see if the volume... it gets worse, actually. So let's go to September... and December. Yeah, so really, there's just not a whole lot of... We can go out and we can look further and further out, and there'll be even less and less usually. Okay, so this is like all the volume on the future months. So pretty much all the volume is happening right now in July. And you can see right there, 2, 4, 12, 16, 21, 24, 27, about 2,800 on one side, and maybe another 2,000 on the other, so about 4,500 contracts total traded in a day. It's an illiquid market. So we'll talk about that, what it means for you when we get back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And let's check out where things are at right now. Okay, so we're going into the corn contract, so we're looking at that to show. I wanted to show you just how they're less liquid. And whenever you're trading them, when you're looking at them, so that way you can actually see the difference there and understand that, that's why it's not just like some people come in, they don't really know futures. They haven't traded them. They hadn't traded future options. And so they have this incorrect view on certain trades in the market. So just going over, if I look over, and I'm gonna have to make this a little bit smaller. 1 second, so I can make it fit on the screen. But let's see what we got over here. Go in and make this a few less rows. There we go. All right, so if I go over here and I look at this and have it up, then what you can see is if I flip it to show you corn, like look how many contracts are there. Like 2, 3, 4, 450 maybe on both sides of, depth and liquidity in that. Go over something like, say, silver, even smaller, okay? Let's go over to gold, and actually pretty small as well. Let's dive into something like oil. And you'll see that, we got, quite a bit going on there in oil. So, but, it's it's amazing how, I mean, what was that, 1, 2, I guess it's about 500 contracts, pretty small. The total size there. And let's see, like I said, it's trying to scroll through a few different positions here and see what we got. But I'm only short one right there on the ES. I got 10 long on oil, so that's going pretty good. But anyway, so just sort of gives you an idea of, you know, liquidity and depth. And if you'll look at those different markets and see, you know, what kind of depth is actually there. I'm actually surprised to see how much depth there is sitting there right now in corn. It makes it look like they're actually a super liquid market. But anyways, if you look at the end of the day, the volume that's traded, it's really not that significant. But the options are what's really low. And so understanding those options and sort of, I guess, understanding overall just how they work, then you'll be able to do that. Let me see if I can pull this up. Trying to see if I can get one more thing for you. Okay. But, yeah, I was trying to pull something up, but I'm not going to be able to do it. But, yeah, right over here, like I said, we got, you know, a couple hundred pretty deep, but then 50, 60. We go over to something like I said, the S&P, and we look at that right now. And we got that one is, you know, what is that? 1, 2, 3, 4, 5, 6, 7,000 contracts. Compared to, we can go look at NASDAQ. Let's see what it's looking like right now. And on that one, we got 1, 2, 3, 400. Surprised that soybeans. Let's just check out soybeans where it's at. It's about half right now, and usually soybeans actually moves more. So there's a lot. There is quite a bit of activity. It was like at least sitting there, a lot of pending limits, but also looks like they may be trying to park it at the moment, like they stick it there by sticking those heavy orders there. So we'll see if that keeps up. It looks like they're starting to back off now. I'm starting to see contracts come on out. But anyways, it's just not an insanely liquid market. Oil, you know, on the other hand, a little bit different position. If you go in and look at it, it'll keep that volume going up and down, up and down, up and down very, very consistently. Okay? So if we go over here and we look at, you know, copper, that's a, you know, very flat market. You know, not a flat market, sorry, a very low liquid market as well. But, you know, just make sure you're aware of the liquidity. Look at the bid-ask spread on the market. See what makes the most sense to you. What do you think would be the wisest position for you to take whenever you're, you know, putting those on. When you hop over to an options market, understand it's a derivative. It will have less liquidity. It will have more bid-ask spread. So, you know, you want to make sure you're aware of that. And so I'm going to have to tighten up some of my positions here. Starting to just label in a couple of my stops on my oil position. Start locking in some of those profits. It's got them built in there. Okay, so anyways, looking at where we're at on the other markets, we want to go into maybe do some magnet pricing. So let's visit magnet pricing. We'll start with oil when we get back after this break, okay?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so going to check out oil over here. And let me get all these markers off the screen. 1 second. Makes it a little easier. All the trades labeled on there. Okay. So, what do we do for our magnet pricing? How does magnet pricing work? Why does it work? It's where all the volume is. Okay? And I have my platform set to actually program to link and merge the contracts for a continuous contract going backwards. Even though I may put in the current month, it'll still link to the contracts retroactively to ensure that we're getting that actual volume. So let's go over here. Let's look at this. Let's see what we see as a really high volume day, and you can really just increase your volume up to really help you visually see what number to use there. Okay. Once you do that, then you can sort of scroll over and go, okay, what really captures a majority? Because I don't want to get this just like normal volume that's down here. So I'll grab this and put it down here. I'm like, okay, well, I'm capturing a lot of the trades that are happening. I don't want to do that. So right about at this level, I really start filtering out and not getting just a whole lot of the volume. So if I sort of zoom in a little bit further, see if that's a true statement. Okay, yeah, we're definitely getting like the top 10, maybe 15% of contracts. Sort of scrolling back, just looking to make sure. So I don't want to get all this clumps of orders right here. So otherwise, there's nothing really that magnetic to it. Okay. If I go, well, what if I lowered it down a little bit further to grab, like, say, prices like that? Do I really need them? Not really, because look what happens. If I go up here, I'm still capturing, majority of all major price movement. I don't want a bazillion levels, okay? I don't want to have a magnet price every time there's a volume bar. So I'm actually trying to rule out having bars being triggered, because the more I got, the more difficult it gets to actually determine what the magnet prices are. So today was a pretty high volume day on oil. But going back and looking, going, okay, looks like overall we're definitely in that upper limit. There may be 2, 3, 4 bars a day that could actually hit that. That's actually pretty high. We could even try to say, I want to limit it even more, because that's a lot of bars in a single day. But oil is also a very volatile instrument. Okay. So I may not want to just go and go, I'm going to rule that out because I only want 1 or 2. Well, if I look at that and I'm like, well, this really was a lower peak on the day, even though we didn't have as much volume. So once I've narrowed that down, okay, then we got to bring price back into the mix. So to do that, for the moment, what I'm going to do is I'm going to get rid of my deviations just for a second. I can bring them back. Okay. Really want to put all my focus right into just the volume itself. And go, okay, well, what was my most recent? I got to work backwards on this, okay? I'll work forwards going into the future, but I got to work backwards right now. And, if I need to fine-tune the volume, then I got to go back and double-check it. Like if I decide, I need to move this down, right to this level, then I'll have to move it down. But we'll see if I have to first. So right now, let's grab our crosshair. Makes it a lot easier to line things up. Well, that's not a surprise. See that big spike right there? Also the high of the day. That's definitely going to be a magnet price. Okay, so we're going to put that magnet right there. And this has not been broken. So you can use whatever levels you want to, or whatever colors you want. Use something that makes sense to you. Okay, so I'm going to put green up there. This level has not been broken yet. And I can sort of look at these other levels and go, do I really want to include them or not include them? I'm like, well, right there, was that really a magnet? That do anything? Not comparative to this level. Okay. So I'm just going to sort of ignore the rest of the levels for the day. That is my high level on the day. Let's go over here. Here's another high level. All right, so right there. And we can put that over here. And start out with making it green for a second just to look at it. Now also you can use rays, so that's another choice. Probably should do that. I just need to get in that practice. I'm just not in it. A ray is a little bit easier. So the advantage of the ray, that's not the ray. Where is their stupid ray? What the ray will do for you is it will basically draw the line to the right. But you got to line this. I hate it because it's not automatically vertical. But you got to line it up because it can go up and down. That's the one thing I don't like about it, which means you're going to have to go in and manually just make sure that it is perfectly set up, and then you can change the color, and then you can change this right here. What's the advantage of the ray? The one advantage to it is you can see where it started. I do like seeing that the levels have been hit over and over and over again in the past, that was a magnet price. So there is an advantage of also not doing it as a ray, but as a ray you can at least see where it started. And then once you do that, just set it as your default. Makes it a little bit easier. Okay, so we go over here. Here's another level that we were setting right there. And yeah, so we don't do the line, we'll do the ray, but right here. Try to get that thing lined up. There we go. Okay, so we got that one. Now, look what happened. We came right around this price. We were magnetized to it, right? So I just kept hitting it over and over. It ran up, but it did not run up with any significant volume. This is huge. Okay, so looking at that volume, that magnet, that is definitely a magnet. The market did not go through it with volume. It broke through it, but not with volume. Okay, no significant volume on the breakthrough there. And so we'll go back over here, and we're going to look at this, and notice right here how it went down, sort of popped it, okay? Didn't break through it. Didn't actually close, I don't believe, underneath it. We got to close, 104.46. was it 104.46? Let's see here. Low 104.46. At close of 104.53. So that should closed above that last magnet, but with a pretty decent amount of volume. Okay, so almost like remagnetizing the level. And so you could go in again. You could take this ray right here. You could draw the same line, but we could make that one, you know, like a little bit different color. All right. So this is sort of like what you could say it looked like, you know, yesterday. Before. Now we obviously don't have the upper prices there. It was like really pushing those highs, but so it pops on up, has another magnet. Either it's going to drift higher, you know, or bust through, or it's going to come back down. If it does come back down, where's it going to come back down to? It's going to come right back down to the last magnet. Notice how what happened when it came down here. Look at how it oscillated, and it stood here for about an hour, a little over an hour. It just stayed right at this magnet before it finally broke down. So that's where we're going to want to know where's that last magnet, because that's how we know when it does break down. Either it's going to bounce back up to here, or it's going to come back down to here. This is huge on binary pricing. This is huge on knowing what spread you want to choose when you want to trade. It's huge on taking profits. It's huge on throwing stops. It's huge on being very careful about when to add into a position. I mean, there's so many applications. Well, here's definitely another level. And it was green level there, but we would actually have to, let me go in, we'll put it in. Okay. So we'll add this ray in, we'll do some analysis. If I can do the right one. There we go. I'm gonna have, like I said, I have to get in the habit of that. But okay. So that right there, you could say, is that level. That next, you know, magnet. You can see how it like oscillated around that magnet level. Yeah, see how it jacked it up. Apply that. And then we can change the color now, because now we're above it, and we're above it with volume. See how we have some major volume on the upside, making a new magnet? So now what I can do is I can go, okay, well now let's just completely change the color of this thing to, you know, a different color, whatever we want it to be. And, you know, let's do dots. Like, okay, we've hit that level. So that's an old level that's already been broken, at least to the upside. And there's different ways, different color schemes you can come up with. But this thing's still moving down. Oil's still going down. That's why I'm taking profits in, you know, certain positions. And but you know, I had a bunch on from a while back, and I started adding on to my short spreads to hedge the position off as it flew. It was coming up this morning. Started adding a bunch of short spreads on, and so now I'm starting to take off those short spreads along with, you know, closing out my my long oil contracts there. But anyway, so looking over here and going, okay, well, where's this thing trying to go to, man? Because it looks like it wants to bust down even further. And so we got that level. We have to go a little bit further back. We're going to keep tracking this until we get, you know, this really nailed down. And I want to try to find myself a really high volume level. I'm starting to find that I don't like these lower volume marks, so I'm going to raise that up a little bit to see if that can become a standard for what we're looking for. Well, let's see. It looks like we used that level. That was a solid move. Okay. So right there, and trying to avoid bars that don't have those levels on them. And that's where it's not like this is exact science. I mean, you got to sort of look at what are the key levels that you can tell are definitely key levels in the market. Well, looking at this, and go, okay, so we got basically these two bars right here. And so I'm going to get that one in. It's being a definite place that we could be heading towards. Okay. And then going over, we have another price level right here. Do the same thing with that one. That's right at 102.70. We'll adjust the color on that one. And again, I like to make sure, you just got to make sure that's the one bad thing I said about the rays, you got to make sure they line up. But, so you can track that. It's like, well, wow, that doesn't give us a whole lot to go on. I mean, you're telling me that we're shooting for 102.70 to the downside? Well, maybe. Yeah. So let's see. Is there anything in between there? Right, because that's a pretty massive move to go on down, but that might be where oil is heading. And it seems like so bold to say, but it's not based on like my opinion. I'm looking at where the volume is. And so we could see that move. We may see that move today. We might see that move tomorrow. I mean, tomorrow is oil inventory day, right? So, and that as big as a move as that looks, I mean, we got the gain from 102.70 up to the current price level yesterday, up to 104. We've got some massive, massive swings in oil. So that's really not as big as that moves look. It's not an unrealistic call to say that we're looking for oil to move on down to 102.70 right now, and because we really didn't have any massive volume in between that price and the price that we're just now breaking down. So that actually is, I would say, my next target would be 102.70 to the downside. To the upside, about as high as I go at the moment, 105.05. What does that mean? What can I do? How can I trade that? Well, let's go in and let's check out our tools. We're coming up on 145. We're coming to the last 30 minutes. I'm not expecting a drop to 102.70 today. I think it's highly possible tomorrow. So what could I do to look at that? I'm going to look at the weekly contracts. I'm going to look at tomorrow, the ability to go in and go, hey, is there something I can do? Well, there's a 102.75 weekly right now that I can sell for $88.50. Okay? $89 actually, so pretty cheap. And that's actually right in line with our target of 102.70. So if people will go, why would you trade the, because a lot of times I say I don't trade the weeklies because I'm like, why make in, why wait a week to make what you can make in a day or make in an hour? Well, sometimes you expect it to take longer than that. So I can go in, I can put these contracts on, and let's see here. So if it goes down to that price, I can put on 50 contracts, and right now risking $575. Okay? And I have until Friday for it to get there. That's pretty nice. I'm going to go ahead and I'm going to set a take profit order on it. Okay? So it's down my bid-ask spread. Not a big surprise when I'm selling it $90 basically. And I'm going to set for at least half of it to take profit at 57. I'll be more than ahead. Okay, on my entire position. I'm only risking basically $10. So that put me up, like $30-something per contract. So that more than cover all my risk on my remaining positions and lock in a profit. Should half of my positions be filled at 57. Hit place order. Okay, so now those contracts are sitting out there. What if I'm just dead wrong and the market goes up? What can I do? Where do I think it's going to go, and what can I do to hedge that off? Well, remember I said I think it may go up to 105. So we'll talk about the offsetting hedge position here when we get back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. So basically what we're doing is we're going in, we sold 50 contracts at the 102.75s for Friday's expiration. Okay, that gives us Wednesday with oil inventory coming out. That gives us Thursday. Natural gas inventory can impact oil a little bit. Gives us all day Friday. Gives us 3 days to be right on the trade. So pretty sweet move there. Could it move back down that far that fast? It moved up that far that fast yesterday. No reason why it can't move down that far that fast today. Tomorrow. So I would actually be surprised if it didn't happen by tomorrow. But we'll see. Now, it also could pop on back up to 105. How can I hedge that off? Well, what I'm doing is I'm going to buy for every 5 that I did on the short side. I'm going to go ahead and buy 1 on the long side of the 104.75s. Now, I'm not doing this to eliminate my risk. I'm doing it to lower my risk. Okay, so what I do is I actually bought 10. In my case, I bought 10 of the 104.75s for $30. All right, and I'm going to get out of them if it hits 57, which is what the simulator basically tells me. If I look right over here, the simulator shows me that, hey, if this right here went up to 105, it'd be worth right at $57. Okay? So I put in my order to get out at 57. How much is that going to make me on 10 contracts? That's going to make me $270. What am I risking on the other trade? About $570. So it's going to knock out about half of my risk. That may happen overnight. I don't know. It may hop up overnight. It may hit that. It may take my profit, and the market may fall back down, and I may grab an extra free 270. If it falls back down, I may profit on both sides. Now, it could just stay flat for the next 3 days, and I could lose on both sides of the trade. What I'm trying to do is, just in case it does fly against me, I don't take a total hit on the trade. I'm just sort of lowering my risk should it move up, further up against me. And then, of course, I can find other trades. I already also, in addition to that, as a, I have on other positions. So, like I said, I got on, the long oil contracts. So, I got long oil contracts on. I got short binary contracts on. I got a few long binary contracts on. You can go in. You can also throw in some spreads with that. I got short spread trades on. So, you can put in short spread trades. All these. You can do these demo. You can do these live. You can practice with whatever, is best suited for you and how you like to trade. But, as it starts ticking up, at least also I'm not stressing out going, oh, man, it's moving against me. Well, okay, if it does hit there, that'll knock out some of my risk, and I still got till Friday for it to come back around. If it doesn't, that's okay. I can look at other trade possibilities. It's very possible it could pop up, hit that. After it hits that, we watch it just drop for the rest of the week. So I have no idea what's going to happen. You have no idea what's going to happen. How can we best leverage our options to give us a probability of profiting in multiple market scenarios? And by not only combining the products, but also looking at magnet pricing to get realistic price expectations, that can help us out a ton. I can go back in now and I can add in, say, like deviation levels. We talked about those. I took them off to begin with a little bit earlier. So I can throw that on, sort of see where we're at. Well, right now, and let's see, I can expand this so you can see the bottom part of it. We're at a deviation high to low, okay? So I'm not surprised that we basically stopped for the day. Okay, we slowed down, we stopped, not much is happening. Could it keep going down? Yeah, we may get a little, plummet right here in the last 30 minutes. We also may see it do absolutely nothing. But I'm not surprised that we're at a pause level, a support level right now, because we are at a 1 deviation high to low. This orange line right here is a minus 1 deviation. Okay, the green is say how far have we retraced from the high. So it lines up perfectly with where we should expect a pause. So not really freaking out, just going, okay, this is a point of contention. This is a good point to put on some trades in 2 directions. And let it work itself out. We got till Friday to see how the trade plays out. All right. I hope you all have a great day. I'll see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.